Hey guys and girls, welcome to this week's episode of the B.Invested Birchy podcast. I'm your host, Nathan Birch, and this is a show unraveling the truth of the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. Some people won't wake up, and that's okay, right? We don't all want to be property investors. If we're all property investors, you'd have no tenants. We need people to be tenants. So if they don't want to be waking up, leave them asleep, let them be tenants, and then we've got a cash flow sorted. But today's topic of discussion is, why do most people fail when it comes to property investing, and what makes the difference between someone that fails and someone that doesn't fail when it comes to property investing? And I've covered often a lot of these topics over the years in different videos and webinars and different things sort of covered off on. But I think it's important to break it down and sort of look at the things, because quite often, like, I'll speak to someone, they'll buy like 5 properties and they might get scared, or they'll go, shit, where do I go? Or they might go, I want to buy 20 properties, and they do one, and it's like, no, you can do 20. And they're like, no, I'll just stay at one. And then they get fearful of, as Jeremy from my team would say when he speaks to his clients, he's like, they're hanging on, they're going for a skydive, right? And they're holding onto the side of the plane, they won't jump out. They've gone all the way up, they're not ready to jump out. And, I think it's important to, look at your position and go, well, how can I keep improving things? Like, I can sit here today and go, I've got all these properties, but I still think it's shit, right? I still think it's shit. I was thinking about it the other day, and I was like, there's literally corporations out there, right? I use the word corporation now, not just people. There's corporations out there that have tens of thousands of properties in their position, right? And as an investor, how do I get? I've got hundreds of properties. Yeah, that was okay, but it depends who I'm standing next to at the urinal, right? I don't want to be sitting there going, oh, this is great, when it's not really. It's good, no doubt about it, but how do I get to that next level, right? And I need to show up as a different person. I need to be able to take all that I've known and then add and be open to, to keep growing. And it doesn't matter if it's the first property I bought. I remember buying my first property. I went home, I was like, I'd planned for like 5 years. I want to go and be a property investor, going to go buy a property. I bought it, went home, and I wasn't crying like a little girl, but I was like fucking scared. I woke up the next day, I'm like, oh, I think I'm going to go broke. I just got myself into a $250,000 property. This, that, the next thing. It happens, right? It happens. But then it's like, how do you push forward from that? How do you grow from it? It's like, oh, my first property, the roof caved in with termites. And that'd be enough for people to go, oh, fuck, this is all too hard. Get rid of it, right? No, I need to get more. Then I got into trouble with council because I built a granny flat. And I was like, fuck, I need to overcome that. And for the last 20 years, I've just realized that I need to overcome problems to be able to grow and push forward as an investor. But it's like, are you prepared to face what you're facing? Are you equipped with the right resource to face what you're facing? Do you need to be facing half the state you're facing today? Or could you be, removing the risk and minimizing risk along the way? And, as an investor, I've just had to think of that and go, okay, well, how do I minimize risk? And there's always going to be risk, right? And if you told someone, 20 years ago, hey, you're going to be risking your money by leaving it in the bank, people go, no, cash is great. You want to have cash in the bank. You want to have cash, right? You don't want to have debt. You've got to go, well, the debt is the asset today. Your cash is the risk, because your cash is losing its purchasing ability. It would have sounded all upside down, right? But that's the world we live in today. So looking at it, there's risk everywhere, but it's always minimizing the risk and being able to push forward and take one step forward and keep pushing forward to get to where you want to be. So I think if we go back to the core principles, as basic as what it is, I always say, buy the properties below market value, have a strong upside for growth, and have a positive cash flow. Then add it in, you want to be buying it in an area which has got the potential for servicing, for people to see it go double and triple. What I mean by that, you're buying a property in an area for $1.5 million. How can it double to $3 million if the income doesn't support a loan past $1.5 million? But if you're buying in an area where it's $300,000 and the income can support up to a $600,000 or an $800,000 loan, there's a really good possibility for that to be able to go up. Besides that, you want to be buying the asset below rebuild costs, because inflation is one of the biggest factors out there. So basics like that. But then what is your plan? What is your goal, right? People get fearful. Like, people go, oh, yeah, I just want to buy 10 properties. Like, okay, well, what do the 10 properties do? I haven't really thought about that. I just want to buy property. Well, hang on a second. If you don't know why you're buying the property, you don't know how it's going to fit into your portfolio, are you sure you're taking the right steps? Are you sure that you've got the right property? Are you sure that you've got the right thing that you're adding into your portfolio today? So they're the things that you need to be looking at. It's like, what is my plan? What is the strategy? What do I need? Do I need cash flow at the moment? Do I need equity? Do I need growth? You might need heaps of cash flow today, but in the future you might need equity. You might need equity today, but in the future you might need cash flow. Throughout the last 20 years of investing, I haven't needed the same thing over and over again. I've gone through stages, like go and buy these, go and buy that. I went and bought all the foundation properties, then I went and bought blocks of units, then I went and bought acreages, and I was like, fuck, I fucked up my cash flow, but I've got massive land holdings. To be a developer, I'm not going to be one of the maddest developers when I do get to the point of being a developer. If I want to go down that road, if not, I've just got mad land holdings. Equity's grown up, capital's gone up. But then I'm like, well, I need to make more cash flow. So I go to buying motels. Motels pay for the cash flow to service those other things. So it's all working out what do you need in your portfolio to be able to navigate to the next level. I know very clearly moving forward, I've talked about buying 100 properties in a year, and I'll talk about buying 500 properties in a year in the next few years, right? And I know what I need to do to be able to get there because I've tweaked the strategy all these years moving forward. So, there's so many times where people can hit an adversity, hit a wall, and they just think, okay, there's a brick wall in front of me. That's it. Got to turn around and go the opposite direction. But it's like, is that a roadblock or is it a building block? And how do you use that as your building block? And how do you put in your pocket as an advantage? So, if you don't have clarity, you don't have the direction of where you need to go, then it becomes, stuck in a feedback loop or stuck in a cycle, and you can get trapped. So just something to watch out for there. Poor financial management, whether that be from your own personal budget, from your own personal expenditure, whether it comes from poor planning, having a poor financial position, it all starts from somewhere. And sometimes it's just as simple as one action that you took could have a compounding effect over years and years and years and years. It's happened to me over the years as well. And it's like, shit, how do we fix that? How do we navigate away from that? How do we improve on that position? So if you do find yourself in a bad financial spot, what can you do to improve it? It's not like it's forever. Things don't last forever. Things change, things evolve. You don't want to get drowned and pushed back or held back. I see people holding onto something for 10 years. They made a mistake 10 years ago. They come to me and they're like, oh, I've got this thing. It hasn't got up. I want it to go up. I'm just going to hold on to it. It's like, well, that's fucking you up, right? Like, you're not looking at the cost of what the damage is from your opportunity costs that you've had. Oh, I'll sell it and make 200 grand in the next boom. It's like, well, you sell it and make 200 grand in the next boom. You'll have 4 deposits, but that's 4 deposits for properties today. And those 4 properties will be double or triple the money in the future. You've missed out on opportunity cost. So, don't let a bad decision hold you back for, the next decade. Make sure you attend to it. I think one of the biggest things that people get stuck on in failure or failing to be a successful property investor is emotion. An emotion from an ego or an emotion from a fear. Either way is going to fuck you up, right? Emotion doesn't pay the bill. Opinions don't pay the bill. The facts do, right? And I remember many, many years ago, I haven't said this much recently, but numbers don't lie. And the numbers are what's important, right? So if you're looking at it, people will go, they get greedy and they go, I want to do 50 of these, right? And then they get themselves stuck in some way. They get fearful and they go, well, I don't want to do it because of this, I don't want to do that. Your emotions, you need to take them completely off the table, right? I could sit here and my mum, right? Let's just use my mum as an example. My mum, I love her dearly, right? She gave me life and all that sort of stuff. She's 80 years old, very blessed to be her son and all that. But I love my mum. So if I could have my mum working in my business, it would be a fantastic thing, right? But if I brought my mum in my business, she wouldn't be the right person for the business, right? And it would cause very different things, right? So just because I have a mum and I want to put in my business, it wouldn't mean that's the right thing to do, right? So when you're an investor, like, do you buy a property to put a family member in your house, right? Do you buy a property? Are you buying it for the right intention? I want to buy it because it's next door to my house and potentially maybe I can control the neighbours or whatever. I don't want riffraff in there, whatever, right? Stupid decision for doing something. I want to buy this property because potentially I could, but it's good, right? It's a nice area. It's got a good school near it, right? It's like, well, that's good, but you ain't telling me financially how it's going to help you, right? You need to look financially. If you're a financial person, right, and you want to be successful financially, you need to fucking understand calculations and mathematics, right? So there's a good starting point as well. But don't give your bullshit excuses when you can't even fucking calculate mathematics to work out, oh yeah, it's good because, but potentially, if you find yourself saying potentially, hopefully, maybe or one day, fucking wrong deal, walk away, your emotions are talking, right? Because you want to look at financially. You want to know, if I'm going to be successful financially, this thing has to support me financially and successfully to get me to where I want to be. And I think that people's emotions overrule any logic, right? And you see it on a daily basis, whether it's your mate that's done a dumb shit, whether he's been out driving or done something stupid with the wrong girl or whatever the case may be. People get him stuck in all these stupid decisions, but it's all based on emotion. If you can make logical decisions, justify it with some emotion to it. That's cool. But don't make an emotional decision without looking at the logic part of it. The logic is very important. So emotion gets you killed. So just remember that. It doesn't matter if you're in business, doesn't matter if you're an investor. Most people fuck themselves up because they're emotional. One thing as well is lack of patience. I've seen people over the years that have had the opportunity to be really successful. They bought something expecting it's going to double in a year or double in 2 years or double in 5 years, and it might be year 6 or year 7 or year 8 or year 10 that it doubles, triples, quadruples. And they sold it, right? And I speak to some people now, and I'll call them up, we'll have a chat. And it's like, oh, hey, it's been a couple of years, how's things going? Oh, yeah, good. I'm like, oh, your properties are done fantastic. Like, yeah, I don't want to talk about it, mate. It's like, why do you want to talk about it? And I know, and I actually don't like talking about it. I actually try to shy away from the conversation if this conversation changes a course of direction. Because I'm like, people sell their property, they buy it for 200, they sell it for 300, now it's worth 600, and they're like, oh, I took 100 grand profit, but they didn't take the big gain on it. And there's so many people that I bought, say, 10 years ago, 7 years ago, that were in the Gold Coast, right? I was buying these properties for 200 grand, they're renting for $300 a week, fantastic. Some people sold, right? They sold them for 300, made 100 grand. Some people are holding them now, they're worth 600 grand, they're renting for $600-700 a week. And they've got 10 of them. They're retired on like 150, 200 grand a year. They didn't think it was going to happen, but they looked and go, yeah, fuck, the numbers stack up. We're going to stick to the plan, be focused, committed, determined. We'll make sure it happens. That's the path that we're moving along. So you can't be half-assed in your goal, right? You can't be sitting there going, oh, yeah. There's people I see out there, and I've never been to a seminar per se, but I've seen these people. Like I've spoken at seminars. I've seen these people, and it's like they're buying every single course at a seminar, right? I'm not being a piss take if someone's does this, but they go to every seminar. They try to learn. They go, oh, I learned a course on how to build a granny flat this week. I learned a course on how to trade Forex this week. I learned a course on cryptocurrency this week, and they're just fucking jumping into the hottest thing that someone's telling them, getting excited, and then it dissipates, and they go to the next thing that gives them a bit of a dopamine hit and goes back. Like, have a strategy that works and just keep focusing on that strategy, refining that strategy, improving that strategy, and building from that. So the other thing is as well, within that kind of comes off the side of it, is like the failure to adapt and the failure to grow. I could be sitting here saying, well, I will only buy houses in Mount Druitt for 200 grand, right? If I kept saying that to you guys, I wouldn't have bought anything for the last 10 years, right? I've gone into other markets. I've found the next market that's like that, found the things that have gone up, found the things that have been great. But people get fixated because, no, this is gone, that's, it's not right. So, not looking at markets going up, like, I'll spend more. If the market goes up, I'm like, okay, cool. It works up until this point. I've got to adjust into that market. Once it is this point, it's not really. I might buy one or two every now and then, but I'm not going to be as aggressive in that market as what I was previously. So, looking at that. The other thing is, I think a lot of people fail on a due diligence front. So they're either one part is over too analytical, which takes us back to the emotion, analysis paralysis, which people get stuck on. They know what they should be doing, but they won't do it. They're fearful, whatever. But then the other part of it is the real important part is not having the right due diligence, not speaking and consulting with the right people. Not, if you have a plan, you go, this doesn't seem right, I need to call the accountant, right? This doesn't sound right, I need to call the buyer's agent. This doesn't sound right, I need to speak to my investment, guru. This doesn't sound right, I need to speak to my broker. This doesn't sound right, I need to speak to the lawyer. I see people get themselves in screwed up positions because they've cut corners, they haven't listened, they haven't had the right people, they've tried to shortcut things, they've tried to outsmart the system, they've tried to do certain things, and it's like, you just stepped on a landmine, right? I can't help you, you've blown your leg off. So, inadequate due diligence, it comes back to hastiness, it comes back to not protecting yourself. I look at contracts, for example, right? Just a simple thing down to contracts. In my process and systems and procedures in my business, thousands, like 15,000 transactions, right? I've never had anyone in Perth or Western Australia, or Queensland ever lose $1 of a deposit, because we have special clauses in there that protect them. Finance clauses, due diligence clauses, all these special clauses, which no one's lost a deposit beforehand, because of that protection for the due diligence perspective to be able to come in. So, looking at it, a lot of people try and cut corners when it comes to doing due diligence. Make sure you're doing your due diligence. And I think another area, and it's probably like the final one, and it sort of ties back, I don't know why people don't do this, lack of diversification, right? Like, all my properties are likely to be one sort of type, right? Like, I do prefer these sorts of things. Have a couple of certain things as your criteria of what you need and what you require in your portfolio and stick to that, right? But I see people that buy only houses and only in the suburb that they belong in, or only in the state that they belong in, or only within a half hour or an hour away from their house. And it's like, there's inherent risks that come through that, right? If that market sits idle for the next 10 years, well, then you're going to be sitting idle for the next 10 years. If, the rents don't go up in that area, but they go up in, I don't know, let's say you're in Melbourne and they go up in Brisbane and Perth and Sydney, and, your location doesn't go up, well, then there's a risk that's attached to that. I'd like to spread the risk and have, be strategically placed with the acquisitions to make sure that I'm picking up and buying things right at the bottom of the market cycle just before the uptick, and with all the core fundamentals and principles in there, not just buying everything in the one area. So, I see people getting stuck on that quite significantly and quite a lot. So, you need to look at the holistic approach. You need to look at the overall goal of what you're trying to achieve. You need to look and make sure that the thing I think, if you've got the first part right, which is what I said today, is having the plan and having the strategy and having a business plan there, you can always go back and reference to that, right? And it's like a core part of truth because you've worked out plan A, plan B, plan C, plan D, and tried to work out second plans for those things. So once you've got the solid plan and the solid strategy in place, I always think when I'm going to make a decision, right? I've got a mate, and he says to me, Nathan, if you have to ask that question, it's probably not the right thing, right? It's just a random thing, right? He always says that. But I think to myself, whenever I make a decision and I'm about to put left foot out, right foot out in front of me, if I take that step, is that going to get me closer or further away from my goal? If you have no idea, no bearing, no weighting, no grounding on where you need to be traveling, right? If you just go to yourself, I need to hop in the car, go for a drive for 3 days, and I'm going to end up at my destination. You're leaving from Melbourne, you hop in the car and you're heading towards Perth. You haven't checked anything. You haven't got a map. You haven't got a strategy. You haven't got a direction. You don't know where we're going. You drive for 3 days. You end up in fucking Cairns, right? You're like, shit, I'm in the total opposite direction of where I need to be, right? I've done the driving. I've done this. I've done that. You can always, if you have strategy, you have a roadmap, you have clarity, you have a plan, you can go, well, am I on track? Have I deviated from that track? How quickly do I get back on track? What's the easiest way for me to go back on track? Do I have to reverse and come back 2 steps? Do I need to go forward 2 steps? That's the importance of having clarity on that front. So importance of going back to plan A all the time, having a plan in place. Most people are planning more for what they're going to do for their next weekend partying. People thinking more about the next holiday, what they're going to spend their money on Thursday night, late night shopping, and what they do, thinking, how am I going to plan to get the fuck out of this miserable 40 years of being trapped in a job, paying taxes in a job that I don't like to do, right? Spend the time, focus on what's important. You'd rather be spending more time with your kids, partying, traveling, do whatever it is that makes you happy, but plan for it. You're not going to escape without planning for it. So I guess comes to the last part of the podcast is how not to fail when it comes to property investing. I guess having the right team around you is very, very important, whether it be a good broker, a good accountant, good lawyer, good property managers, a good tradespeople, a good buyer's agent. Here we are, right? Birchy's been building large portfolios for 15 years now, helping investors be able to exit the rat race and exit the matrix as well. Having the right people around you, getting the right advice, having the right strategy in place, leaving your emotions outside the door, don't bring them to the table. And I guess once you've got that knowledge, take action towards it, right? A lot of people will know what they need to do, just procrastinate, don't do stuff. And equally, if you don't know what you're doing, don't take action, right? So if you don't know what you're doing, don't take action. If you know what you're doing, just fucking take action because you know what you need to do. If you need help on building the portfolio or any advice or one-on-one work or whatever, reach out to myself, my team, admin at B.Invested.com.au, call us 1300 367 925 and flick us some questions below if you have any questions. Make sure to tune every Thursday, Google Play, Apple Play, Spotify and YouTube. Thanks a lot for watching. Have a great week. Bye for now.
soon to be hyperinflated. This my 2 cents, don't care if you save it. Join be decentralized and you will see you be light.